In this video, I'd like to talk about LeverageFX.com's trend explosion system. It's a very simple strategy. It's very easy for most new traders to learn and trade with and profit from pretty much right off the bat. This is a USD Swiss franc chart. It's 35 ticks per bar, and I have the hourly statistical high, which is the orange line. The blue line is the average hourly statistical low. The yellow line in the middle is the 180-minute balance point line. This is not a moving average, but looks like one. It actually takes every single trade over the last 3 hours and shows you where the average trader has their position. I have the Keltner channels white above and below, and we also show the trend reversal signals, which are very accurate at predicting when the market's likely to reverse. You can see it worked 100% today, but most days 65 to 80% accurate. This system trades only with the trend. If you look down here on the FX multi-map, we primarily use the 720-minute trend. That's a half day. That's 12 hours. If that's red, which you can see down here on the bottom, dark red, the market's really weak. You want to short the upper Keltner channels, or at the yellow balance point line, or at the average hourly high. So we get short right here. This is the first trade. That's good for about 10 pips. Market comes up to that again. You get short. The 60-minute FX multi-map also shows much more weakness than strength. Very much no-brainer trade. You get short, falls another 10 pips, so you're up 20 already. You short it again right here. Market falls about 15 pips. And here you can see that the half-day trend is now starting to lessen. If you shorted this at the Keltner channel right here, you still made a little bit of money, but you can see the FX multi-map on the 60-minute time frame is now starting to show more strength than previously for the whole day. Plus, the half-day trend is now pretty much mixed. The 3-day trend is still clearly down, but you got to be careful. You're not going to make a whole lot of money on that trade. And so when the market comes back down and touches yellow balance point line, this is the area that most traders are short over the last 3 hours. So considering that there's some buying pressure coming in, the Swiss franc is likely to go up. This is a safe place to buy. Because it's slightly green here, we want to be looking only for long trades. Now if you shorted up here, again, you would have made money. However, if you're trading with the half-day trend, which reduces your chances of losing money on a trade, you have a lot higher win percentage. Today, if you traded in the direction of this on pullbacks, you had 100% winning trades. But this trade also worked. Now because it's also green, we want to buy right here at the lower Keltner channel. We also got a trend reversal signal, and you can see the market shot out from around 24.05 all the way up to 24.25. So it's about 20 pip up move. The market came back down again. You could consider buying right here, and you can see it went about 6 pips against you, and then quickly went back up. Let's look at some other examples. In this example of the Euro USD, you can see that the half-day trend was strongly up, the 3-day trend was strongly up, and the 60-minute smaller time frame trend was showing on all the up moves significantly higher strength than on the down moves. And so the market's trend was up. You want to buy pullbacks. Here's your first buy right here, right at the average hourly statistical low and the Keltner channel. You can see everything's green. The 720 and the 4320 minute multi-map, the half-day and 3-day trend strongly up. So you buy right here, and the market shoots up about 20-25 pips. Comes back down to the balance point line here after the 60-minute made a highest high for the entire day. That means the market's very likely to continue up. During this little pullback right here, you see virtually very little weakness. Very safe place to buy, and you can see you made about 10-12 pips on that trade. Now, you could also buy this pullback again, but notice the weakness is starting to increase. And as it goes back up, you can see this is an example of a divergence trade. Pretty much similar highs, slightly lower, but there's almost no strength at all. Aggressive traders can consider shorting this because you can also see the half-day trend starting to lessen. And now as the market comes back down, you can see that it's now mixed and now slightly weak. And so as it returns up to the yellow balance point line, this is where most traders over the last 3 hours have their position. Anybody who bought over the last couple hours is long from right at this price, and they just had the market go 10, 12 pips against them. So there's going to be natural selling at this price the first time back. So you can consider shorting that, and as the market pulls back down, you can see the multi-map does not show that much weakness. So you just get out of this trade for a quick scalp. You can see every trade based on the half-day and 3-day trend, trading in that direction, made money. 100% wins. Close to 60 pips today in the euro and 75 pips in the Swiss franc in one day. This is a very easy to follow, straight trend following approach. If the trend's up, we're looking to buy on the dips. If the trend's down, we're looking to sell rallies at support and resistance levels. The yellow balance point line is wonderful at the first touch. Keltner channels,